The next has to do with access. The first term is brokerage. This is a platform like Robinhood, Fidelity, or Schwab. They're all like the gateway that allows you to buy and sell stock. So the stock is sitting on these different exchanges, but platforms like Robinhood allow you to interact and purchase. So does it really matter if it's on NASDAQ or Dow or anything? Not really. If you're investing in specific sectors, it may, but generally if you're just buying a stock, it doesn't matter if it's on a Dow, if it's on a NASDAQ. It's really transparent and irrelevant to you. But I want to make sure you understand that. You understand what those terms mean when you hear them. The next term is ticker. And I'm sure everyone's seen a ticker. Tickers are like that short abbreviation for a company. If I use Microsoft, for instance, their ticker is MSFT, or Tesla, TSLA. So each stock of a public company has a ticker. And they could be usually 3 to 5 digits or 5 characters. Stock. This is actual ownership of a company. So when public companies or corporations in general are established, they have to distribute. I have to tell how much stock they're going to distribute. And stock is part of the ownership. If a company is distributing 1 million shares of stock and the company decides to keep all 1 million shares, then the company will retain 100% owner because they maintain and retain all their stock. A share price. The share price is the price of how much it costs to purchase one share of stock. This number changes all day, all the time. So, 1 second, the share price might be this number, then it goes up or goes down, and that's just the movement of the true fundamentals of the stock market. So that price is the price based on the current demand. The next term is market capitalization. And you probably heard it saying as market cap or market capitalization, either term, but it's the total value of a company's stock. And it's calculated by the number of shares times their stock price. So you hear companies like Apple, I think was the first $1 trillion company, and they determine that by the number of shares they had and the current stock price that stock was selling at. Mutual fund. Mutual funds are set up by a number of companies similar to ETFs, but they're funds that allow you to diversify. Let's say, for instance, you want to invest in real estate, then there's maybe a real estate mutual fund that pulls a lot of different real estate companies and real estate verticals and different aspects of the real estate industry into this mutual fund, so that when you're buying this mutual fund, you're actually purchasing parts of those other companies as well. It tries to spread out the risk overall, so you're not just buying one single company. A portfolio, your portfolio more specifically, is your collection of investments. It's like your personal baskets of stocks and cryptocurrencies, mutual funds, and other assets, and when dealing with stocks and investment.